Hey, what's going on? It's Nick here from Ways of Wealth, week 29 of the market recap. If this is your first time here, we highlight key events that happened in the market over the past week. So I'm going to ask you a huge favor. If you learned something new, smash that like button. It helps the channel grow. Don't forget to subscribe. We do this every single week. When one door opens, another one closes, and that kind of highlights what's going on with Disney right now. It was announced that Disney World in Florida opened up this week with social distancing measures, but then we also got word that Disneyland in Hong Kong was issued to shut down. So we'll break down if Disney is a good investment at this point right now. Alright, let's dive in. It was two sides of the coin this week in news stories from Disney. On one side of the coin, you had the Disneyland Hong Kong location being shut down by government mandate due to the daily number of virus cases rising in that region. On the other side of the coin, you had the company in the Florida location, the Disney World location, go full guns ahead with what they were planning. The almost 100-year-old company was confident with the social measuring and the practices that they had put into place. So that park opened up this week, whereas in Hong Kong, the other one was forced to shut down. When you take a look at the variance between the new number of daily cases between Hong Kong and between Florida, it makes you wonder why one location is closing and not the other. Hong Kong was able to flatten the curve after the original outbreak in March and had originally reopened the Disneyland location on June 15th, but have since seen an uptick in cases. On the other hand, Florida only recently started their uptick in June as the state started to reopen and limit the restrictions placed. Off the hop, we can see the difference in severity. On July 18th, it was announced in Hong Kong that there was 58 new cases, whereas Florida announced 11,466 new cases. How could it be that so little cases in Hong Kong is causing so much havoc, whereas the number of new cases in Florida is not causing much hesitation at all? Is it because the company estimates a loss of about $1 billion in potential earnings every month that the parks are shut down? Or is it that Disney doesn't even have a majority stake in the Hong Kong Disneyland location? The Hong Kong government actually owns about 53% of the park, whereas Disney only owns 47%. So do they not have that much control? Are they being vetoed on that side? Is it because they know the Hong Kong location is being closed down? They're missing out on those potential revenues, so they've decided to go full ahead on the Florida location, knowing that that is the breadwinner on the family of parks. Now, Disney did receive some backlash this week in the media. The most prominent of those figures was Abigail Disney. Now, if you're not familiar with her, obviously, as the last name ensues, she is the great niece of Walt Disney, the creator and founder of the company. The Harris was on Squawk Box this week to explain her confusion about how the company was planning on protecting not only the guests of the park, but the employees as well. Although she has no financial interest in the company, she is still familiar with the employees of the park and discussed their fear to return to work. Brandon Lorenz, who is the director of communication for the Actors Equity, questioned the lack of testing for performers at the park or lack thereof. Is the risk worth the reward? Let's take a look and see if Disney is a good investment at these levels. Here are what the analysts are saying about Disney as an investment. So there's 31 analysts, 4 are rating this a strong buy, 13 are rating it a buy, and 12 had Disney as a hold. There are 23 price targets on the stock. with the average being around $122 a share, and the stock currently trades at around 118 a share, so about 3.1% upside from this point today. We also know that back in May, when they reported that they had scrapped the dividend, this was in an attempt to save as much cash flow as possible, because obviously the parks weren't able to generate any cash. The Disney Cruise Lines, which we received some news earlier this week, had been announced by the CDC that they would be pushing off all cruises over 150 people up until September 30th, and that would be further reviewed at that point. So it's not set in stone that they'll be coming back at the end of September, beginning of October. We also know that these closures and social distancing measures shut down film production. So we also know that the releases that they had planned for 2020 and 2021 will be delayed. So it's very important that we take a look at what the free cash flow is telling us. In regards to the debt levels, on the latest report in May, the net debt was approximately $42 billion. And the company, on the flip side, had about $206 billion in total assets, which is only about a 0.27% debt ratio, which does not give any concern of Disney defaulting on the debt. A company which has a debt ratio of closer to 1 is a little bit more concerning, because obviously they don't have enough assets to cover, and then if any creditors come, if they're not able to make any payments, they wouldn't have enough assets to pay, leading to eventually bankruptcy. Not to forget the streaming platform Disney Plus, which was released late last year in November 2019. So that is definitely the growth section of the company. We saw Netflix report last week, and they had gained about 10 million new subscribers. So if I were to estimate, if I were to guess, I would believe that Disney would follow the same suit in terms of a record number or a higher number of new subscribers. Obviously, a lot of kids aren't able to go to school. Parents are at home. They're looking for something to distract the kids. I think that we should see a good report. Although it is not profitable at this moment, my investment strategy is to buy and hold. I want to own that company for a long period of time. So if you believe in Disney Plus, if you believe in the assets, the movies, the branding, the intellectual property that they have, this will eventually be a great source of not only revenue but earnings in the time to come. Now, I am not a financial advisor, and I definitely suggest that you do your own market research. I definitely would advise not to take only my word for granted. Make sure you check out a couple different sources. You look at the balance sheet, you look at the prospect of the company. But in my opinion, the company is overvalued. There are a lot of short-term hurdles that the company will have to get around. Definitely at 118, this company is way out of the park. They cut their dividend, so there's no getting paid to wait. So I definitely believe in the brand long term, but it's all about picking your points of entry. This company could see some weakness in whether it's the next earnings report or whether it's a potential bad news situation where a potential secondary lockdown may occur where they have to shut down the park, much like we've seen in Hong Kong. So make sure to watch the stock, see where it's trending, and figure out where a good entry point is if you like Disney long term. So let me know down in the comments what you think of Disney. Is it a buy? Is it a hold? Or is it a sell? And that is all for this week in the market recap. Thank you for your support. I appreciate it. Again, I ask you, if you learned something new, please give me a thumbs up. If you haven't already, please subscribe. We do this every single week. It is a big week coming up as well. It's earnings season. You have a lot of companies reporting. You're going to figure out who the winners were during the lockdown and who the companies that need to rejig their business plan moving forward. Thank you again for tuning in. Have a great week on the markets. Happy trading.